We got some exciting comparisons for today's video.
We have Robinhood, which has generated explosive growth by disrupting traditional brokerage with free stocks and commission-free trading.
And we have the largest crypto exchange in the US, Coinbase.
You may wonder, how are we comparing apples to oranges?
Well, let's check it out without any further ado. Let's go.
Remember, we also have an overall market update at the end of the video to prepare you for next week's market.
And be sure to subscribe so you don't miss any important information from us weekly.
Personally, I don't like Robinhood or Coinbase, but they are pretty hot lately.
Yup, the two hottest IPO this year.
One is a stockbroker and the other is a crypto broker.
They have similar business model, but they are similar in market cap too.
And they compete in the same small area.
Yep, Robinhood also offer crypto trading.
But Robinhood definitely doesn't have as many selection as Coinbase.
Yeah, either company is not for me though. Too much risk.
That seems like the issue for a lot of people when considering investing in these two companies.
Well, help me break them both down and make a decision if I want to pick any.
Yep, but before we get started, I want you guys to be open-minded.
We may think something is bad, but you might beg to different.
So leave a comment if you disagree.
We are all ears. You may very well be right.
Similar to our last video with Square and PayPal, we focus on investing logic instead of going too deep in each company and its industry.
Yep, since we are not experts, and you can find that in their earnings anyway, so we thought, why bother?
First, let's start with how they make money.
Robinhood is a stock brokerage firm. It offers commission-free stock trading, and you can buy fractional shares.
As in, you can own a company for as little as $1, even if the stock price is $600 a share.
It also has a user-friendly and game-like user interface, which is very popular among the retail traders.
It is one of the biggest retail brokerages in 2018.
Have you thought about why Robinhood can offer free commissions?
They receive payment for order flow, or PFOF. Basically, they quote a higher price to their customers and pocket the spread, or the difference between bid and ask.
So, for example, if you want to buy a share of Tesla and the market price is $650, but Robinhood might quote you $650.10.
That extra 10 cents will be Robinhood's profit.
Wait, can they really do that?
Yeah, SEC actually allows it, and a lot of other brokerage firms are doing the same thing.
Okay, according to their latest earning, PFOF accounted for 80% of their revenues.
Damn, traditional brokerage firms have between 10 to 30% from PFOF.
Next up, Coinbase. It only offers crypto trading and is the biggest crypto brokerage in the US.
Not just in the US, their business covers over 100 countries.
So compared to Robinhood, which is only offered in the US, Coinbase is more diverse in countries offered.
But Robinhood offers more than stocks. Coinbase only offers cryptos. Their revenue is pretty much all from commission.
We can see from the latest earnings, 90% of its revenue is from trading fees, which means Coinbase's potential is heavily dependent on the growth of cryptocurrencies.
Based on the business model, these two are pretty similar.
So which one is more valuable to invest?
Let's compare them from three aspects: growth potential, risks, and fundamentals.
For Robinhood, its growth potential will come from its global expansions. This has a high certainty, since Robin has proven that its business model works in the US already.
So it plans on using similar model for Asian and European markets, since most foreign countries or most foreign markets still don't have zero commission brokerage.
So with their zero commissions and nice user interface, it has a good chance to take a good amount of foreign market shares, don't you think?
True. Domestically, Robinhood also has room to grow, just not so much on the user growth. They will be counting on their main customers, people ages 25 to 40, as those people's wealth increases, meaning more trading volume on their platform.
Sounds like a slow process, but I think it has a good certainty.
Yep. So Robinhood focuses on new international user growth and domestic wealth buildup from existing users.
Even though it has a high certainty, but the potential won't be as big as we imagine.
I agree. Even though its business expanded tenfold in the past 2 years, that is mainly because of unprecedented times.
Meaning this rate of growth is not sustainable, since it is still a traditional brokerage firm.
Yup, the competition is fierce and its market size will likely stay the same. It's not going to be easy to grab foreign market shares since they have to comply with foreign regulations, and unfortunately, not every country allows PFOF, which is their main source of revenue.
I think Robinhood knows that, so their CEO said he wants to look beyond trading and he wants Robinhood to become the only app that people use on their phones for money, from deposit, bill paid, to splitting payments with friends.
I think that's a good dream to have, but how are they going to replace bank apps that already exist? I already have my banking app that I deposit to. I'm definitely not going to go to a new app to do that. What about you? What do you think?
I think that's the only way to diversify their product line. You can't fully rely on collecting trading commissions to sustain this absurd company valuation.
It sounds great if they can actually do it. Then we would have to reevaluate its potential. But until it can provide a blueprint, it's still just a trading app.
Sounds like Robinhood is limited by its industry. Coinbase also has the same problem.
Yep, limited by the industry, but not because the market size won't increase, but due to the market size not increasing fast enough.
And that makes sense. Stock have been around for over 100 years, but crypto's just started, so it has a tons of room to grow.
Especially since this year a lot of institutions are recognizing crypto's characteristic as an asset. This is very important for Coinbase, who emphasizes its institutional customers.
Sounds like as long as the crypto market keep expanding, Coinbase doesn't have to go steal all the market shares. It will grow with the market.
But on the other hand, if crypto market isn't growing fast enough, then Coinbase's growth will be limited as well.
And nobody will know when crypto growth will accelerate consistently.
Right. And just like Robinhood's executive, they also realize that they'll be limited by the market. So they're also trying to expand their business.
They are partnering with Visa to issue Coinbase card. Cardholders can use their Coinbase assets as collateral to make purchases.
But just like Robinhood's one app for all money, Coinbase card is still a bit far from realization. We would have to see some actual numbers once people start to use it. Until then, we also cannot include this when comparing to Robinhood, since we didn't include the one-stop shop for Robinhood.
Well, at least this is more of a sure thing than Robinhood's one-stop shop.
Yeah, I actually like Coinbase card, and I don't believe in Robinhood's dream, but hey, never say never.
So far, Robinhood in short term, the growth is more certain, but for long term, it is limited by the total market size. The stock trading market size will pretty much be this big, and Robinhood would have to pry from other firms.
As for Coinbase, the market growth has no limit that we can see so far, but it's highly uncertain. In short term, there isn't any super exciting catalyst, and it's relying on a growth of obviously crypto market.
Seems like it's a tie in this round. If you are more conservative, you can pick Robinhood. And if you are more aggressive, you can bet on the higher risk but more rewarding Coinbase.
All right, round 2, risks.
Until Robinhood creates a new revenue stream, the biggest risk is the regulations.
Yep, again, 80% of its revenue is from PFOF, basically quoting their customers higher price than market, and they're allowed to do so all because of SEC allowing them.
Yep, Robinhood has fined 65 million by the SEC for misleading its customer by telling them that it is making money from PFOF.
So if SEC actually starts to regulate PFOF, sounds like Robinhood will be pretty fucked.
A lot of people are suggesting a ban on PFOF, which is why this is always be a risk looming over Robinhood.
I don't think PFOF will be banned, but on an off chance that it does, Robinhood will likely not survive it.
Another risk for Robinhood is volatile share price, basically a meme stock now.
Yep, it doubled in a week and then halved in the next week. Robinhood definitely doesn't want to see that.
Unfortunately, it's not up to them. Looking at the risk for Coinbase, as we mentioned, Coinbase growth depends heavily on the growth of crypto market.
So naturally, the biggest risk comes from the crypto market. Coinbase is basically all in on crypto growth.
So all the downside that comes with the crypto will be risks for Coinbase, such as regulation, safety, and slow growth.
I think if crypto prices dip a lot, it could cause the trading volume to decrease significantly. The crypto itself can take 3 to 5 years to recover the price, and they will. But Coinbase being a company might not be able to last that long with low volume and low commission and fees.
A good point. Also, assuming the volume is consistent, the volatility nature of cryptos will be associated with the Coinbase stock price.
So just be aware that Coinbase share price can be very volatile.
Another risk is competitions. Although Coinbase has early start over other companies, many companies are offering crypto trading and holding services.
Yeah, both Square and PayPal have it.
Don't forget, Robinhood also offers crypto trading and no commissions too.
Do you think eventually Coinbase or other companies will offer zero commission crypto trading?
Very possible, but I do know that Coinbase offers far more cryptocurrencies than any other trading platform. I don't think it is an easy integration to have all the cryptocurrencies in the market. Otherwise, Robinhood would have had them on their platform already. But then again, it's a matter of time, in my opinion.
Yeah, it's definitely a matter of time. Once everyone starts offering zero commission crypto trading, Coinbase needs to figure out other ways to monetize crypto trading.
Looking at the risk for both Robinhood and Coinbase, they are both very dependent on its market. When stock market is hot, Robinhood's revenue will be great. When the cryptos are hot, Coinbase revenue will be hotter.
Of course, if the market or crypto sucks, both companies will suffer. I feel like since the stock market is way stabler than crypto market, Robinhood is seemingly less risky.
Yep, I agree. Overall, Robinhood is less risky. However, Robinhood's regulation and meme stocks risks are completely unpredictable and uncontrollable. But Coinbase industry and competition risks are much more predictable. I'll give Coinbase this round.
Okay, round 3. Let's look at each company's valuation and the finances.
Valuation-wise, Robinhood is more expensive than Coinbase.
The price to sales for next 12 months is roughly lower than 17, after the earnings drop. And EV over sales and EV over EBITDA are 19 and 107 roughly. This valuation is much higher than the industry average.
And since it is only a brokerage firm, its profitability and growth rate are not as fast as tech companies. So you can't evaluate Robinhood as a tech company.
Compared to Robinhood, Coinbase's pricing is more reasonable. The price to sale for next 12 months is around 9. EV over sales is around 8 and EV over EBITDA is about 17.
So it looks like since they both have similar business model, Coinbase obviously has more attractive valuation to invest.
Exactly. And if you believe that crypto will start expanding quickly, Coinbase might even be undervalued.
On revenue growth, even though Robinhood recorded blazing revenue growth in the past and even doubled from last quarter from earning this Wednesday, there's still not much room for growth in the future.
As for Coinbase, even though it turned in an 11x revenue growth for the past year, but its current growth is slowing down by a lot. So don't get tricked by their high growth in the past year. Based on their traditional business model, we can safely assume that last year was an anomaly.
Yep, we definitely should not expect the same growth rate for both companies.
As far as profitability, in the past year where the market has been so bullish since the March of 2020, Robinhood is basically breaking even and always have cash flow issues.
Coinbase is much better than that. It's already have a few profitable quarters. And for the past 2 quarters, the operating cash flow both exceeded 3 billions. This shows that Coinbase has a very healthy fundamentals.
Yep, it has the funding backing if needed.
Sounds like we have a winner for this round. Coinbase has a friendlier valuation and better fundamental.
Yep, looks like the tiebreaker goes to Coinbase. Even though Coinbase's market growth is less certain than that of Robinhood, but um, since the risk is more manageable,
And let's not forget the strong fundamental too. Coinbase beat Robinhood 2-1.
personally, I'm opening a small position in Coinbase at 225 if it gets there, since I want to bet on the crypto market growth. What about you?
Coinbase does look tempting at this price level, but it is still a very risky bet on the cryptocurrencies due to unreliable expectations. Remember, we still haven't heard of anti crypto regulation yet, so we don't know what the futures hold. So if I have to put my money between these two, I will bet on Robinhood over Coinbase because it's better diversified and is very popular among younger investors. Robinhood will likely grow along with all these millennial and Gen Z's wealth. If the price ever retraces back to the 30 range, I will consider initiating my position there.
And looking at the overall market this week, I was expecting more downside so I can load up on some of my favorite stock.
But nope, the S&P 500 only down about 0.5% this week, and Nasdaq pretty much closed the week flat.
4,418 was the battleground for the bull and the bear. We tested this level on Tuesday and unfortunately broke down on Wednesday.
Yup, after the bull lost this support, the stock price accelerated to the downside for another percent. Likely, this is from triggering a lot of short-term investors' stop losses.
4,418 is still the most important level for the week. It was a support, but since it broke down, it became a resistance. The price got rejected multiple times before reclaiming it on Friday morning.
Very nice technical we are seeing here. The S&P also broke up on the trend line and the bull gained more confidence on busting through that critical level.
The bull looks chilling on Friday, making that higher high and higher low, ending the week at 4,441.
Yep, keep your eyes on the 4,418. This should be an important level continue into next week.
And real quick on small cap, we are testing the bottom of the box. This is a make it or break it level.
Nasdaq is looking very strong. Looks like they are going to test the upper resistance at 15,155. This is also a make it or break it level for the Nasdaq. Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.